Good afternoon, everyone. This is your T3 Live Editor-in-Chief, John Darsie, here to bring you the daily recap. So today we had another day of somewhat indecision in the market. This morning we had a few pieces of really strong economic data, and we're hoping that we're entering an environment where good is good, where good economic data is positive for the stock market, is positive for everybody's outlook. But we've been stuck in that mood for so long where good economic data leads everybody to say, oh, is the Fed going to taper QE? Are we going to lose our punch bowl? And the market's gone down as a result of that. Today, we got some good data. There were several asset classes that performed like the QE will get tapered in September, but then you had stocks actually hold up pretty well. So that's actually a positive that we saw today, is that we saw things like gold go down. We saw things like bond yields go up, but we saw the stock market actually hold in reasonably well. And I think that's a silver lining you can get, despite the fact that many people are talking about how today's data could lead the Fed to definitely tapering September. Just something to note in terms of action in the S&P. That was the biggest takeaway I would take from today. We can take a look at the chart to see the price action from today's candlestick. Like I said, it's just another day of indecisive type action. As we open near the flat line, it's Rosh Hashanah. Jewish traders are not going to be in the office. It led to a lot of low volume, a very low volume session, as you can see here, relative to what we've even been getting recently. We closed off our highs after a good start in the morning. But just to reiterate what I said, a lot of indecision right now in the market. You have the Syria stuff looming over our head, in addition to everybody's worries about potential QE tapering in September, the rate decision will be later this month. But with economic data more in focus, there was a lot more discussion of the Fed, and also the discussion at the G20 summit about QE, as a lot of foreign finance ministers are actually warning the U.S. against tapering because of the damage it could do to what's still a fragile economic recovery. But you talk about bonds, which I mentioned briefly, is the TLT was really weak today, as, like I said, that economic data pushed bond yields higher and sent that ETF tumbling back towards its lows. We can take a look at the chart of the TLT. Really weak today. We had those the positive jobless claims this morning. We had a good ISM non-manufacturing survey results, and it looks like we're headed back to test this bottom on the TLT, which tracks a 20-year Treasury bond. So, like I said, weakness in bonds sometimes weighs on the stock market, but today we were able to shrug it off. Gold is another example of people expecting potential QE tapering in September. Weak on that strong economic data today, breaking down below its 21-day moving average. The 8-day is also curling down, so after a good bounce back for gold, you're really seeing it tumble lower as well. But I wouldn't say there's a compelling trade setup right now in gold, just something to take note of. Just bonds and gold, evidence of the fact that people think that the Fed is headed towards that September QE taper, which will be something that will be increasingly in focus over the next couple weeks. Now to the stock-specific portion of the show. This morning in the morning call, this week in Off the Charts, last week in Off the Charts, we highlighted a series of setups that have really worked out really well, and I'll go over a few of them. This morning, one of the themes I talked about was how in the tech sector, over the last few days, you've seen some of those forgotten leaders. The names like Google, Amazon, you call them forgotten. You must have a short-term memory if you're calling them forgotten, but a lot of people around here do, because a lot of people with T3 Live are short-term active traders. So when a stock underperforms for a few weeks, it goes sort of off the A list. But Google, Amazon have had multi-week pullbacks, but they had started to perk up again in the last few days. And Amazon wasn't as strong today. It actually rested. You saw Google was able to continue its strength. As you can see on the chart, nice continuation from yesterday's big igniting bar. The fourth day up, hard to chase here. This would be an area where I would be more looking to trim, if it's a short-term position, looking to trim that position. But on a macro sense, Google's an outstanding company, outstanding stock. No reason to even contemplate selling anything at these levels. But then that theme I talked about this morning was that some of those forgotten tech leaders have reemerged, but we also got a return of momentum in our all-star tech names, for lack of a better way of putting it, those names that have really been outperforming in the last few weeks. talking about the Facebooks, the LinkedIn, the Netflixes of the world. We can go and take a look at the chart of Facebook, which had a really impressive breakout move today after resting over the past few sessions. New highs for Facebook above 42. Like I said, really impressive action. It allowed some time for that 8-day moving average to play a little bit of catch-up, which makes you feel more comfortable about buying for a breakout, and really nice momentum early, especially in the session for Facebook. LinkedIn continues to be an absolute rock star. We talked about how this gap down here, it was the result of a secondary offering, which normally secondary offerings are a sign that some of the insiders are looking to cash out a little bit. But this secondary offering, it appears for LinkedIn, is actually going to be used more just for company growth, and it doesn't look like insiders are really looking to cash out aggressively. So something a little different than you see from a lot of secondary offerings. And then the response on the chart for LinkedIn has been in keeping with that, as people have bought this secondary offer aggressively. As it broke here above this recent pivot high, the pivot here from this tail was 247.98, so we're obviously above that. And obviously, if you're trading a short-term vehicle like LinkedIn after that secondary offering, you can use things like the previous day's high and low as points of reference. That's something that Mike Lee and Steve LeVay talk about in their momentum trading room, is using previous day's highs and lows as short-term points of reference. And obviously, on a break above yesterday's high in LinkedIn, you could have got some really nice movement, some really nice upside. Talk about Netflix. Just a nice gap up today. Obviously not really tradable from an intraday perspective, but helped to account for some of the gains in NASDAQ, and just a sign that money's rotating back into these tech all-stars, as I dubbed earlier. Just another example of some really nice price action that we saw today. This morning, we also talked about strength in the automakers, GM and Ford, after coming out with really strong year-over-year sales growth numbers. And I said basically that when you get a big igniting bar in a stock, usually that tells you that more upside is in store. It tells you there's some disruption that happened with the data, and buyers really piled in, and there are probably more on the way from an institutional perspective even after those really strong growth numbers. You take a look at the chart of GM. Obviously, that big igniting bar yesterday, it did close off its highs a little bit today. So in the short term, could be a little bit exhausted, but well above all of its moving averages. Broke above this cluster of resistance here, although it did close back near it. But like I said, I expect to see GM at highs sooner rather than later. The highs coming back in July. Ford, not quite as potent a move yesterday, but actually better follow through today. It gapped up, closed less off of its highs, so showed a little bit more conviction, commitment to the upside, I guess you could call it, today. Just like GM, I expect to see Ford making new 52-week highs above this July pivot here. Just something we talked about in the morning call today that panned out really well. And just an example of when you get an igniting bar like that, this is a concept we talk about in the Active Trader course. When you get a disruptive igniting bar, sort of like you saw on the gap up from Facebook on earnings this quarter, we see something that's really disruptive on the chart. It generally leads to more upside, and you can feel confident. You never want to chase, but you can feel confident paying up a little bit after these big igniting bars. Under Armour, another stock I talked about this morning as a quick hit, which I just was taking a look around my charts last night. This is one that really jumped out to me as a really bullish pattern. As we were edging towards a breakout yesterday, there wasn't much momentum. But as I said this morning, I expected above 52-week highs to get some momentum coming in, and that's what we got. We got a really potent move higher in Under Armour. You can zoom out. You can see the run that Under Armour has been on. It's one of those highly valued names, trades at a high multiple that some people like to naysay, but it's another one that just keeps going and going and going. So after today's breakout, maybe a little bit harder to chase. Maybe you look for a consolidation or a retest of that breakout. But just an example of the type of movement we continue to get in this market. There. And then Schlumberger. We talked about two oil service names that we really liked last week and off the charts. We talked about Schlumberger, SLB, and EOG Natural Resources. Both of them actually performed pretty well today, but Schlumberger was the better of the two. Take a look at the chart. Get out of this. Schlumberger, really nice move above this lower part of the base. If you want to talk about the entire multi-month base, you talk about a break above this pivot here. but we had sort of a lower pivot down here. You could even talk about yesterday's highs as an area point of reference to trade against, which is what I talked about in the morning call this morning. Really nice momentum in Schlumberger. Oil's been all over the map based on these Syria headlines, and it remains to be seen whether there's going to be any military action in Syria. All signs point to the fact that there will be something done by the U.S. military there. So I think oil should continue to be on your radar. And these oil service stocks, they don't necessarily trade exactly in lockstep with crude. So that actually, I like that better because they're not going to be as subject to headlines. And these companies, their financials are all really positive right now. And the technicals are lining up too. So Schlumberger is one I really like. Even after today's move, I think you'll continue to get more upside in SLB. EOG, Natural Resources, another one that we like the pattern. It's been actually stronger this year, but doesn't have quite as calculated of a pattern at these upper levels as SLB does. Today it looked like it was going to stretch its legs and break out, but it closed off its highs a little bit, maybe signaling that it's a little bit tired and some rest might be due, and it might not be ready for this type of move yet. But that'll do it for today's daily recap. As I talked about, today was the first day of Rosh Hashanah that goes through the end of the week. We saw really low volume as a result of that. Summer's supposed to end after Labor Day and volume's supposed to pick up a little bit, but just the timing of that holiday this week sort of threw things for a wrench. I know schools, for example, are not starting in the Northeast, especially until after this week due to the holiday. So just a sign that you should continue to be a little bit tactical, a little bit cautious. And today's lack of commitment to the upside, we closed a little bit off our highs again. Another sign to be a little bit cautious, short-term, tactical. And then the fact that this is a headline-driven market still. Yes, we were able to shift the focus a little bit today onto economic data, that type of stuff, but Syria still looms. The more and more I read about it, the more and more I think we would be absolutely crazy to do anything there in terms of strikes, because you dip your toe in, you sort of have to finish the job and make sure you do right by the people by establishing some stability over there. But seems like limited action is not going to be effective enough, and then another full-scale war in the Middle East could lead to all kinds of issues. That's not something we want to be involved in, but just a little political commentary there. Syria still looms, headline-driven market, Rosh Hashanah. Take it easy. Sit on your hands a little bit, take a very stock-specific approach. There continues to be great movement like we highlighted today, like we've been highlighting in off the charts. So it's at least worth being in front of your computer, I guess, if you want to be a stock picker. This has been John Darsie, your editor-in-chief here for the Daily Recap. Scott will be back tomorrow morning for the relaxed morning call.